window.
Hello traders, Gary Wagner here. It is approximately 10:15 a.m. in Honolulu, Hawaii, Wednesday, the 22nd day of June, and this is the daily report for gold. We have gold trading well off the highs of the day, currently trading up about $2.70. You see the current print on the board on our 360-minute candlestick chart, and it is at 1549.82. Interestingly enough, we did have a high today, which took out our previous high at 1559. As you can see right here, this is that current high that I want to be able to breach, and that is 1551. It's quite obvious. Of course, we're at 49, so we're just a little bit shy of that when we look at our current print, which on a red candle will be the bottom of the body right in here. And as you can see for that, the market is still open. It is still trading, but it is well below that. We had a knee-jerk reaction in which gold basically sold off of the highs after Bernanke's press conference. I felt it was a very interesting press conference in that there were things that were mentioned that were anticipated, but I think the big elephant in the room was never talked about. And this is what I mean. He did speak about the fact that QE2, which is scheduled to end at the end of this month, will in fact end. He did also state that the economy is going to continue to be in a slowdown or not pick up the pace as quick as he had wanted to or had believed. But what he did not speak about was the fact that we have a tremendous scenario building in that we have a government which is about to run out of money. In other words, without raising our debt ceiling, the government will run out of money. Now, the fact that this was not even mentioned during his press conference, I found a little bit incongruous, because to me, that's the big elephant in the room. Of course, we still have our issue with Greece. There has been no bailout and no restructuring that effectively will work. That's kind of been put off till mid-July. When we look at the scenario itself, what surprises me the most is that he didn't even mention that. Now, as we are speaking, you do see the market recouping a little bit. I would like to see the market close, of course, above this 1551. But here's what I'm looking at, traders. The fact that we took that out and really made a play exceedingly above that, to me, bodes very, very well for the bulls. Now, where the market closes is also important to me. However, the critical news to me is the fact that that market was able to move up in the way that it did. I think that bodes very, very well for the bulls at this point. We are looking at our 628-minute chart. This is the chart we have been using over the last, call it a week or so, to kind of look at the minor count. Of course, we're looking at this as 1, this is our wave 2, and this is wave 3. Now, on a 628-minute chart, the interesting thing is this is that 1551, 1552, and as you can see, as the market opened here, it closed right at that area, but it closed at that area right after making a new high, and this new high to me is very significant. It then, of course, would open at the close because it's a continuous chart, comes down, you've got a low that is higher than the previous low, but you have a high that is lower than the previous candlestick. And of course, again, this is 628 minutes, so we're dividing the day up roughly into 3 components. And as you can see, we're currently trading within this range. My sentiment is what we are looking at right now is a marketplace that is building its base, and I personally think, based on the fundamentals in the market and the way that the market is trading, that gold is still running a bullish course. However, that bullish course has absolutely slowed down in terms of the tact and its ability to gain price quickly. And when I say quickly, in relation to what we saw over last year during that Super Bowl cycle, I absolutely believe that it's slowed down. But at the same time, I believe that this market is moving higher. And that's absolutely indicative when we look at price action over this last month. Because as you can see, we hit our low right at around the 12th of June, and we haven't looked back since then. The last chart that I want to look at for the day is our daily chart. And the first thing worth noting on a technical basis, and as you know, I believe that these channel lines are extremely intuitive in terms of giving us market information. And I think the most relevant piece of information that I'm getting right now is the fact on the green candles, you've got the bottom of the rectangle right in here, this being the low, this being the open, the low is the bottom of the wick, and the top, of course, is the high. But our current print right here is absolutely above right now that channel line. And to me, that's very, very important. When we go ahead and look at this chart, when we kind of compress it or shrink it down a little bit to gain a little bit more data, as you can see, there is absolutely no doubt that we have found really good support on the bottom of this channel line. And also, as we take that up here, you can see that whereas here it was resistance, we're just going to have to see what happens in this area, because my sentiment is if it's resistance again, it's going to be giving me a different piece of information then this market wants to head higher. In fact, if we see it kind of stalling in this area and get a double top, my sentiment is it's probably going to go and back and test this support level at the bottom of the channel. However, my sentiment right now, and this is based upon the fundamentals in the market, is that we will probably see this particular channel line right in here become support. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange